Well, stocks have had a really good couple of weeks to the upside, and many investors are feeling optimistic. But be careful because I think there's a very good chance the market is going to move lower next week, and I'm going to show you why in just a moment. Then I'm going to do my normal market analysis. We'll look at the stock market, the bond market, currencies, Bitcoin, and the one sector of the market that's really leading the way to the upside. And then finally, at the end of the video, for you day traders out there, I'm going to show you a stock that made really strong gains on Friday, how I found it, and then the entry and exit points, methods that you can use in your own trading. All right, let's get into this week's lead discussion, which is why I think the market has a very good chance of moving lower next week. Now, there's two competing forces at work in the market right now. One is interest rates and inflation, and the second is a weakening of the economy and the potential for a recession. Now, the reason the market sold off in July was because investors were concerned that weak jobs numbers and other weak economic numbers indicated the economy was slowing down a little quicker than expected, and that meant the possibility of a recession. We then had the market make a really strong bounce back as the bond market started to move up, which meant interest rates moving down, and that's all based on the speculation that the US Fed will lower interest rates at the September meeting. In fact, the bond market is predicting a basic 100% chance that we will see a lowering of rates at that Fed meeting in September. Now, that expectation was pretty much confirmed in a speech by Jerome Powell this week, and the bond market's really now just arguing about whether it's going to be a quarter point or a half point. And right now it's leaning more towards a quarter point drop. So that's good for stocks, particularly the broader market. The small cap stocks tend to benefit more from a drop in rates. So why then, with all this optimism, would I think that the market is likely to move lower? Well, there's a simple rule that works over and over again. Now, I want to be clear, it's not 100% that this will happen, but I would say a 70% chance that the market will at a minimum stall and probably pull back a little bit next week. And the rule is this: when markets rally into resistance, when they rally into a ceiling, and I'm going to show you this on a chart in just a moment, when markets rally or stocks rally into resistance, they usually get stuck at resistance. It's a very simple thing. I sometimes think I should put it on a t-shirt because it happens over and over again. So we're going to look at a chart of the S&P 500 in just a moment, but let's just recap here. Expectations are positive for a drop in rates in September. Middle of September is the next Fed meeting. And at the same time, there's still those concerns about a recession. So here is the chart of the S&P 500. We're going to draw some lines on here. This is resistance right up here. And we had the sell-off in July and into the first part of August. This was the weakest point, the reversal day. And since that point, we've rallied very well. Well, notice we've come back to this old price peak. So I call that an inflection point high. And when markets rally into resistance, they almost always get stuck at resistance. Now you can apply this if you're a day trader, a swing trader, a long-term investor. See this happen over and over again. And so because we had such a strong rally move to the upside over the last couple of weeks, you have to think, what are all of these investors that bought the bounce inclined to do? What are they motivated to do? Well, take profit. You know, if you bought the market at 520 and it's at 560, you're a large institutional investor with billions of dollars under management, you're probably going to take some money off the table. The same can be said for the small retail investor who maybe bought options in the market or, you know, bought some of these leverage products that give them, instead of a 6 or 7% upside, 12 or 13% upside on that bounce. So it's likely that we will see some profit taking, and that'll cause the market to pull back a little bit. Doesn't mean that we're in trouble. It's just a normal course of action. What typically you see is the market went down like this, it'll come back, it'll pull back, make hopefully a rising bottom, move back up toward the highs, and just build this cycle of rising bottoms, a nice foundation for the next move up. Now we'll have to see if that unfolds. Again, I would say 70% chance that that's what you'll see next week. and we just watch and ultimately look for the signal that it's going to happen. I'm going to show you a chart in just a moment that will sort of help with that. So let's actually jump into the Stockscores website, and I'm going to look at the short-term chart now of the S&P. And what you want to see as confirmation that the pullback is going to happen is a break of this upward trend line. Now, how did I draw that? I went from the low point across this inflection point, across this inflection point. It's just connecting the dots. If we see the market break this, then we're probably going to start a little pullback. So that's the confirming signal that you want to watch for. Now, it is possible, not impossible at all, that we go sideways here for a few days and then break out. And if that happens, then we're likely to go higher. So you have then two triggers that you want to watch for. Watch the 30-minute or 60-minute chart of the S&P 500 chart, SPY. You could do this on any market chart, really. They're all pretty similar. And look for that break, either through resistance after a pause or breaking the upward trend line, which will lead to some weakness. Okay? So, simple rule, when markets rally into resistance, as we see here, when they hit that ceiling, they get stuck. We saw it start happening on Thursday, and then Friday we bounced back a little bit, but it's likely that we're just going to see a little bit of profit taking. Again, all of these people have some motivation to take some money off the table. All right, let's get into the NASDAQ chart now, QQQ. And this is a little bit more negative than the S&P chart. And the reason is the S&P chart has managed to move back to those all-time highs, while the NASDAQ market has failed to come up to the highs. And this is a concern for those who are invested in those big NASDAQ companies, because they are showing a little bit of a falling top here. And if we break down from this, we would be breaking down from a falling top. And as I've talked about in past videos, uptrends are typically broken when the market breaks an upward trend line from a falling top. And so if we were to come down to here and break this weekly long-term upward trend line, that would essentially mean that money is flowing out of those large cap tech stocks, some of which people think are overextended to the upside, and perhaps flowing into the broader market, which has been a theme of mine for the last little while. And again, if you're first time watching my videos here, make sure you're subscribed to the channel, because I've been talking this story for a while, this moving out of large cap tech, AI related tech, and moving into the broader market. And as we move through these charts today, I'll show you how that money is starting to go other places. So NASDAQ, be a little bit more careful. Now, if we look at the 1 month chart, again, what we want to see is a break of that upward trend line. And if so, we could be starting some weakness. That's the thing to watch for. Hasn't happened yet, but watch for it as a signal that the market's likely to go lower. All right, let's take a look at the Russell 2000 small cap market. And, you know, he had that speech on Friday from Jerome Powell, and it helped the small cap stocks more than it helped the broader market, the large cap stocks. And that's because they are much more sensitive to interest rates. So when Jerome Powell says, yeah, we're probably going to lower rates at our next meeting or soon, well, that really got some money flowing into those small cap stocks. And again, this is a theme that I've been talking about over the last 4 or 6 weeks. The question now is it going to really move into an upward trend and play catch up to the large cap market? Well, we've got that pattern that's an ascending triangle. We broke out in July rather. We had that little correction, but we didn't spoil the cycle of rising bottoms. So there's still optimism building in the small cap stocks. And so I think that this is the sector that's going to lead stocks higher. Now there's one other sector that's stronger. I'll show you that in just a moment. But this is one area, again, to look for opportunity, because so many of these small cap stocks have really been crushed over the last couple of years while interest rates were going up. With that cycle starting to turn, I think you're going to see money start to flow into these good value small cap stocks. They're cheap compared to their large cap tech counterparts. You see some money starting to flow into them, and we're going to see opportunities as those stocks break downward trends, build rising bottoms, and start to go into an optimistic pattern. All right, let's take a look at the Canadian market, which is outperforming the US market. And this, let's talk about the 1 month chart first. You can see here, unlike the US markets, this is actually moving to new highs and is in a upward trend since early August. So this market outperforming, I'll show you why in just a moment. Here's the 3-year chart, and you can see that the buyers are in control. We've got rising bottoms, the trend is up, and this should continue to the upside. So the Canadian market likely to outperform. One factor that's helping as well is weakness of the US dollar, strengthening the Canadian dollar. And so investors from the US are getting a double effect by owning Canadian stocks, because they're not only seeing the market move higher, but they're also getting the benefit of the Canadian dollar moving higher. And that's helping in 2 ways to make those investments more attractive. All right, let's move on now to gold. And this is the important chart that I want to talk about, because gold is at all-time highs. It is in an upward trend. You can see the strong upward trend, and that's a real place for opportunity, as now we're seeing interest in the smaller companies, in the mid-sized companies, which were kind of ignored for a while. They're starting to attract investors because the bullishness of the market. So investors are gold crazy again, and that's helping the gold market move higher. Can't say the same for the oil market. USO is a nice little benchmark for oil, and generally over the past 6-8 months, it's just been going sideways. Now, if we look at the 3-year chart, it's not too bad, because we are building a long-term optimistic pattern. But this is probably going to take a few months to get a breakout here, if at all. And so it's kind of a neutral market, maybe even slightly negative. If we look at the 1 month chart, we can see the trend generally is down. We did make a little double bottom here. We just need to break this downward trend line. If we can do that, okay, then maybe oil starts to look better. But for now, I think you want to be pretty cautious with energy stocks. Let's look at currencies now, and we'll talk about that weak US dollar. You can see if we look at the 1 month chart here, really quite strong weakness in the US dollar. And that's because what's happening in the bond market. Bond market's moving up, interest rates are moving down. That means money flows out of the US dollar, and it's helping other currencies around the world, particularly those commodity-based currencies like the Canadian dollar. In fact, we can take a quick look at the Canadian dollar. FXC is the ETF for that. And you can see this strength here, and that is helping that Canadian market move higher as well. Let's take a look at Bitcoin, GBTC. And it's been quite frothy, quite volatile. If you look at the 1-year chart, you know, we were in this trading range. We broke down out of it. We're trying to get back into it. I think it's likely to find some resistance when it gets back in there. So I think caution warranted with Bitcoin, and I've been saying that for a while. I do think in the short term, we may see Bitcoin move up a little bit because we've broken out, but we're talking about the potential for a week or 2 of strength, if that, maybe just a few days. So I wouldn't get too optimistic in the longer term. It's maybe just a short-term trading phenomenon in Bitcoin. Now, the final chart we're going to look at is TLT. This is the bond market, very important chart. And if we look at the 3-year weekly chart, you can see the downward trend has been broken, rising bottoms. This is likely to move higher. That means interest rates are moving lower. All right, so my ratings then on the markets: US large cap, NASDAQ, small cap, all neutral in both time frames. Canadian stocks bullish on both time frames. Gold bullish on both time frames. Oil neutral. You could say in the short term it's actually negative. It's kind of borderline. US dollar bearish in the short term, still neutral long term. Bitcoin neutral both time frames, but I think deserves some caution. And then bonds bullish on both time frames. All right, before we get into the trade of the week, where I'm going to show you a stock that had a great run on Friday, why I was watching it, and where the entry and exit points, I just want to thank the sponsor of this week's video, which is Troubadour Resources. As I said earlier in the video, the gold market is strong. Canadian gold stocks are strong. And this is an example of one that's really doing quite well lately. It's a small cap company in the gold and copper mining space, and it's been moving up quite nicely. They got $4.5 million in cash. Very good management, very experienced management. I think if you have any interest in that sector, go to their website, troubadourresources.com. And again, thanks for sponsoring this week's video. All right, so now on to the trade of the week. And this week it's on MNTS, Momentous Inc. I don't really know what they do. I don't really care what they do. What I know is that it was a stock worth trading because it was abnormal. And that's what always catches my attention. Now, it started to trade abnormally in the pre-market session. It gapped up, traded strong volume. That immediately puts it on my watch list because I love stocks that catch the interest of investors when really there had been no interest the day before. So it's the surprise factor that I love. And the key thing is that the stock was trading visually abnormal volume. When I looked at a chart, I can see that the volume is much higher than normal. And that is what makes me recognize that there's a crowd gathering there. And with a crowd comes price volatility, which is how traders make money, and emotion, which is how stocks move up much more than they deserve to go up. And as long as you don't believe in the story, as long as you don't buy into whatever the internet is telling you about the company, and you just trade market action, you just trade signals from the market, then you can do really well. So once a stock has got alpha, has got this abnormal volume, I then look for my action candle indicator to fire and either break from low volatility, and I'll show you this in just a moment, or break a pullback in an upward trend. And this stock did both of those things. So this is the chart of MNTS. You can see the pre-market session here was when it started to trade abnormally, trading much more volume than normal. That's 8 o'clock Eastern, which is when the pre-market session opens. We had the stock pulling back from that, and here was the first point. There was the first surprise. So that's your first entry point. Now to buy that break of a downward trend is probably a 6 out of 10. In other words, it has a 60% chance of working. The probability goes higher when you get an action candle, which is my little pink and yellow dot there. And this is an indicator that I make available to my students at Stockscores. You can learn more about that at stockscores.com. When this stock makes a rising bottom, which is a sign of optimism, and then makes an action candle, breaking a pullback, that's now a 7 out of 10. It's a much higher probability, say a 70% chance, that that stock is going to go up. So again, to recap, it was trading abnormal volume, strong liquidity, had a big crowd around it, built a rising bottom, that's a sign of optimism, had a little pullback, and then broke the pullback. That's called a flag pattern. We went up, make this little flag pattern, and then break. So the economics of it are as follows. You buy the action candle, and you plan to lose at the last inflection point low. That's your risk. And then you have some multiple of risk as the stock goes higher. So I'm just drawing these lines sort of an equal space apart, something like that, more or less. And so if you're risking, say, $1,000 on this trade, in other words, the difference between your entry price and your stop loss price represents a risk of $1,000, then here you're up 1,000, here you're up 2,000, here you're up 3,000, 4,000, 5,000, 6,000. Okay, those are risk reward multiples. Now in this instance, when you have a trade go parabolic like this, so in other words, here's a linear trend, and then the trend goes parabolic, it curves to the upside. When that happens, you want to get aggressive on the exit. So you want to wait and watch very closely for a break of the parabolic trend. And that happened right about there, basically at 4 times risk. So again, for $1,000 of risk, your profit is $4,000. If you took a smaller position, say $100 of risk, then your profit is $400. Simple economics, simple method. If you want to learn more about how to do that, go to stockscores.com and go into the trader training section, or you can email me, tylerb@stockscores.com, if you want to learn more about that. Well, hope you've enjoyed this week's video. If so, please click on the like button, subscribe to the channel, but most importantly, trade well.